So we've seen some periods of global volatility in markets in recent months. Are you able to give us some insights around what's driving that volatility and also what the implications are for global monetary policy?
It really comes back to the uncertainty in the current environment. It's hard to say without knowing exactly what's on investors' minds and understanding their psychology, what exactly tripped them over, but just general uneasiness around the economic situation, around politics, especially in the US and the UK, the trade disputes between the US and China right now. How those all unfold is really kind of weighing on investors' minds. And you get a couple economic data points that might be a bit disappointing and kind of just adds more fuel to the fire and builds that conviction that maybe something isn't right. And they're taking markets and long-term investors along for a ride with them.
Closer to home, looking at the Australian Reserve Bank, what do we think that the volatility and the decisions around global monetary policy are going to mean locally?
Yeah, the Reserve Bank is probably going to maintain a tone of stability in all of their communications. You've seen that played up really over the past year, where they've said that they're going to use the bank as a force for stability for the Australian economy, and that's largely in line with what other central banks around the world are going to do. Now, it also means they might be a bit more dovish and might not be raising the policy rate as soon as we might have expected even just a month ago. Our colleagues in the US have revised their view on the Federal Reserve. We think they're only going to raise interest rates one time this year, down from two. So what that means for Australia, we might be on hold just a little bit longer. It's just going to come back to how comfortable does the Reserve Bank feel, that investors feel about the economy.
Thanks so much for sharing your insights.
Great, thank you.